Good afternoon, students. Please confirm, am I audible? I hope I'm audible. Thank you, Sonia. Okay, so I think we can start the new chapter, that is the dividend. Even yesterday we tried to learn that what is the difference between interim dividend and final dividend. I hope everyone is clear with that, right? In today's session, we are going to learn about section 123. Section 123, which is the most lengthy uh, section of the company. Okay, I know that some students are consistently asking for the material, but as I told you guys, the material is under the reconstruction, restructuring. Right now, you started taking the notes on that. I want to refurbish, I want to like remake that, and then I will just providing that to you. And that is why instead of giving the entire material together, I will give the chapter wise. Is it fine to all of you? Chapter wise? Hello? Chapter wise. You please keep it within, and at the end you can just compile this if you want. All right. So let's learn about few questions of section 123. So total 123 to 127. Okay, shall we use ICI study material also? No need. No need. If you are referring the material what I will share with you, after then you no need to go with the ICI material. But as a reference, if you want to use just for certain more clarity, then it is fine. Otherwise, no need. All right, fine. So let come to here the chapter number 8 over here, the declaration and payment of dividend. And we are starting this section 123. Section 123. And look at guys, section 123, it has total 6 subsections. Declaration dividend, section 123. It has total 6 subsections, and all those 6 subsections are provided over here. You can look at the source of dividend that is provided in subsection 1. If you read over here, subsection 2 and the subsection 3, it is about how to issue the dividend out of reserves after and an interim dividend. Subsection 4, it is about how to deposit it. That's the rule. After then, subsection 5, it is talking about the mode of dividend, payment of dividend, how it will happen. And subsection 6 talks about the prohibition. All right. So let's begin with the question first of all, how it goes. Suppose there is a company and the company's name here is, suppose it is Shriram Services Limited. This is the company, Shriram Services Limited. All right, and this is the example. Now this company decided to issue the dividend. All right, issue the dividend. This company decided to go with the dividend on its paid up share capital. The total paid up share capital what is available here, it is 100 crores. And company has decided to go for dividend at the rate of 20%. My question is, can you tell me the total amount of dividend will be declared by or will be given by Shriram Services Limited to the shareholders? Answer it. What will be total amount of dividend which will be paid by Shriram Services Limited? And the answer would be 100 crores multiplied by 20%. So that technically comes to 20 crores. 20 crores. Here, let's take the first question of CA final. Why I'm talking about the CA final? Because earlier this question was there in CA final exam. As I told you, dividend chapter has been taken from CA final to CA IPCC. And then we are continuing, sorry, CA inter. In CA IPCC, this portion was not there. What is the process of declaring dividend? That is the question. All right. What is the process? Process means how it is declared. Okay, answer this question. Is it declared by directors or it is declared by shareholders? Answer the question. It is declared by directors. I'm okay, okay, okay. So what is the procedure? Let's learn about it. Right on here. What is the procedure? What is the procedure? So procedure actually goes like this. First of all, it is decided in board of directors meeting. The board of directors discuss and then finally these people decide that at what rate, at exactly at what rate, the dividend is supposed to be declared or issued. Once it is decided by the board of directors, they will propose the dividend. They will propose the dividend. All right. So understand, the board of directors will propose the dividend. Propose the dividend, and that is why this kind of dividends are not known as declared dividend. They are known as proposed dividend. Proposed dividend. Got it. So directors are not declaring the dividend, students. They are just proposing. They are just proposing. Now, once it is proposed, it is not a final dividend yet because it is just a proposal. Now, the same dividend amount will be discussed in general meeting of the company. In general meeting of the company. And in general meeting, when it is approved, then this becomes declared dividend, or in other words, if you want to understand, it will be considered as final dividend. So this is the process how to go with the dividend. So if you are thinking that directors will declare the dividend, that is wrong thing. They are just proposing. I think you should have learned this topic somewhere, either in your accountancy or during your costing or financial management. Was there any subject in which you understood this topic? How the dividends are getting declared? How dividend is getting declared to shareholders? So this is the process. Now here there is very interesting CFNL question, and that question is Jayesh. Wow, let's have a great round of applause for Jayesh because he actually got it. What is my next question? Wherever you are, please let's have a good round of applause for Mr. Jayesh because he got what what am I trying to say? What is my next question? All right. I hope you're clapping for him. So the point is, in this example, let's say the board of directors has proposed 20% of the dividend. But it is when the matter went to the general meeting, shareholders did not like this 20%. So 100% of the shareholders wants it to be not at the rate of 20%, but they have decided to go at the rate of 80%. So the question is, what if the shareholders want to increase this in the meeting? All right. Just a second. Yes. So the question here is, what if the shareholders, if shareholders demand demand high rate of dividend than proposed by board of directors in the meeting? So that is the question, guys, whether higher rate of dividend will be, and it is passed in by passing the ordinary resolution stating that instead of 20%, they want to go at the rate of 80%. And that is what the question here is, whether is it allowed in the eyes of law or not? What do you think about it? Is it allowed in the eyes of law or not? If all the shareholders agree to go with the higher rate of dividend, they are allowed to take it or not. So what's supposed to be your answer? Okay. Look, I think there are a lot of students are available. Students like you see Nihan, Nimmi, Mahima, Shamika, Sugavanam, Dan, Sonia, Minakshi, Sriram, Ishtika, Jayesh, Prem, Monisha, Bhutya. Lot of students are there, but answer the question. What is your opinion? What is your opinion? All right, think logically. Okay, Mahima says they can. What about others? Maybe they are thinking about it. So let me give you the logic about it. Who are the managers of company? That means who knows better what is the exact financial condition of the company? Directors or shareholders? Directors or shareholders? So can I say board of directors know that what exactly happening inside the company, whether the condition of the company is good, bad? Okay, directors are the persons who knows what is the current situation of the company financially, socially, marketing wise. So the rate of dividend proposed by them, that is the maximum rate of dividend in the eyes of law. What am I trying to say? Look, is it possible that if directors think that this time legally the situation of the company is not that much good to pay the cash, and that is why board of directors decides to pay zero in the sense not to pay any dividend. So is this decision legally valid or not valid? In short, my question is it compulsory to pay dividend every year or it is optional? What do you think about it? Hmm? Hmm? So technically, guys, it is totally optional. It is not compulsory. So whatever rate of interest, sorry, not interest, I'm sorry, whatever rate of dividend declared by board of directors, that will be considered as maximum rate of dividend. What am I trying to say? Write down over here. Write down over here the answer. In this case, all right. In this case, you write down rate declared by board of directors is the maximum. That means shareholders cannot declare the dividend higher than the rate proposed by board of directors. All right. However, can they reduce it? That is another question. If they're thinking that situation not that much good and they are deciding to reduce it, reduce means they want to go down. So is it possible to reduce the rate of dividend? Hmm? Is it possible to reduce the dividend? Answer would be absolutely yes. Reduction is allowed. So write down, however, shareholders, shareholders can reduce the rate of dividend proposed by board of directors. My request is please note it down. And once it's done, type the word done, then I will go to the next explanation. Come on. Done? All right. So that is the first question I have discussed about the dividend, but still it is not ended. Okay. Now here the next question what I want to put over here, it is that what is the source of dividend? That is very interesting. What do you mean by the source here? Right, and what is the source of dividend? Source of dividend. Source means from where the money will be arranged or what kind of money can be utilized to pay the dividend. Now, many of you may be thinking, sir, it will be paid in cash, it will be paid in bank transfer. I agree. Bank transfer, cash, everything is fine, but okay. Basically, if you look at the balance sheet, can I say all the assets can be converted into cash? It may be more than book value or it may be less than book value, but all the assets at the end of the day can be converted into cash. I think that fact is available to everyone. So can I say that every asset has the cash form, every asset has the bank form? Hello? Later or sooner it will be converted into cash or bank. So every asset is cash, every asset is bank. That technically I can say, isn't it? So your answer is that sir, it will be paid out of cash. That is not sufficient. Cash, but what kind of cash? Look, I think all of you know the philosophy of the balance sheet. I must have told you during the foundation. I told you that why two totals of balance sheet are always equal. Did I explain that? Why two totals of balance sheet are always equal? And I proved one thing there. Have I ever explained that to all of you? Why two totals of balance sheets are always equal? Hello? Hello? You can at least type no if you do not know about it. नहीं जयेश I explained it. क्या बात कर रहे हो? I never. ठीक है. During the Indian Partnership Act when I was explaining. Okay, most of us didn't take foundation from BEI. Oh, is it so? We are the first year students. Oh, is it so? Fine, fine. All right, no problem. So let me tell you guys what is the philosophy of the balance sheet. Okay, so answer the question. In the balance sheet, generally both the totals of assets and the liability sides are equal, but why? If I ask you that, why? Why it is equal? You tell me why it is equal. Why totals are always equal? Hmm? Why totals are always equal? Dual aspects? No. Okay, dual aspects. I think Joyce answered like, sir, it is a double entry system. Everything is fine, but in the double entry system, debit is equal to credit, right? Let me just present this for you. Debit amount is equal to credit amount. This is what you are taught with. But why? You do not understand my logic. Practically, why The maker of the double entry system thought in that way. Trial balance in tallied, but what is trial balance? Financial statements are nothing but what I can say, that structured format of trial balance. So ultimately trading account is extracted from the trial balance, profit and loss account is extracted from the trial balance, and even the balance sheet itself is extracted from the trial balance. But my point is, why two sides of balance sheet are always tallied? दोनों एक साथ क्यों tally होते हैं? Sai says when assets increases, either capital expenditures or the liability created. But why? You do not understand why. Do you know what all this you people are telling just like the parrots? Why I'm talking like the parrots? Because the thing is, you are saying what you are mugged up with. These all the things are mugged up in your mind, and that's why you are just vomiting here. No one felt it that why it is like so. Let me give you exactly the reason today why two sides of the balance sheets are always same, and that concept will be used to understand the source of dividend concept. So I want to warn you guys, this concept would be a little bit off the context, but I'm not the accounting faculty. Do you really want to know why two sides of balance sheets are always tallied or always equal? Hello? Why double entry system, credit and debit, these two are always equal? What's the reason behind that? Okay, for that, let's try one journal entry. I want to know, suppose Sugwanam, Mr. Sugwanam, he decides to bring land as capital amounting rupees 50,000 in his business. So land as capital amounting rupees 50,000 in his business. Tell me what should be the journal entry for this? What should be the journal entry for this? What should be the journal entry for this? My God, no one knows. All right, all right, all right. So fundamentally, I can say that land account debit by 50,000 to capital account credit 50,000. If I'm not wrong, this is what is the journal entry you will pass in your books of accounts, isn't it? Now, what is the posting in the balance sheet? If you look at the balance sheet, I think it looks like this. So suppose it is the liability side and amount. This is the asset side and amount. So in the asset side, you people will show land. Uh, okay, this is what is my balance sheet, right? So here the land, it would be 50,000, and here it will be capital 50,000. Now, if I tell you that touch your capital, how will you touch it? If I tell you today that touch your capital, how you people will touch it? Can I say the moment when I touch my land, I'm touching my land? When I touch my land, I'm touching my capital. Can I say like that? When I touch my land, I'm touching my capital. Can I say? Hmm? Today, if I tell you that dig your capital, the moment when you dig your land, ultimately you're digging your capital. So what gets proved because of this? My capital amount and land, fixed assets. According to this experiment, are these two things different or the same thing? Answer the question. Are these two things are different or the same thing? If I touch my land, ultimately I'm touching my capital. So these two things are different or the same thing? Answer the question. So technically, my dear friend, there are no two different sides. It is only one side. It is only one element. But one side is the mirror image of other side. And guys, if both the things are same, how can be total different? I proved in this classroom. Land is equal to my capital. So these two things are not different altogether. They are same only. Actually, it is just the mirror image. Mirror image. Mirror image means what? This is the source and this is the application. The money what I have brought as a capital, it is in the form of land. So fundamentally, these two are not same. Now some of you are asking the question, that's what about the loans? For example, let's say you have taken the loan from the bank. So here let me put the bank loan amount of rupees, suppose 50 lakhs. And the same bank loan is utilized to buy the building, 50 lakhs. So technically speaking, even if the building is written at asset sides of my balance sheet, but the moment when I touch my building, can I say the same time I'm touching the loan as well? Because the building is not owned by me yet. Still, the bank money is unpaid. So if I could not pay my bank loan, I have to sell this building, and out of the proceeds collected, I need to pay the bank. So ultimately, my dear students, there is no fundamental difference between building and the loan. Am I right? Hello? Because land is my money, but building is not my money yet. Until I complete the bank loan, building doesn't become mine. Do you agree with that? Hello? Do you agree with that? All of you? So guys, fundamentally speaking, these two sides are not different from each other. Asset side, it is just mere the representation that how capital is bifurcated, how bank loan is bifurcated here. That's all. So asset side is the bifurcation of the source side. That all. So these two are not fundamentally different, and if these two are not different, how can the total of these two can be different? I hope you are have understood why these are totals are always same. Total are always same. Now, one more question I want to ask you. Let me check your accounting knowledge. Student, if I want to touch my profit, how will I touch it? Come on, goodwill, reserve. Dear, you are still not understanding. Look, if I touch my land, I'm touching my land. If I touch the cash, I'm touching the cash. But what if I want to touch the profit of profit and loss account physically? I want to handshake with it. How will I do this? Maybe you are confused, sir. ऐसा तो कभी सोचा ही नहीं था. Mahima, stock is not your profit until you sell it. Until you sell it. Got it? You didn't get my question. My question, I'm talking about the profit. The profit will be realized when you will earn it. Stock is not the profit. All right, let me tell you here. Whenever you are making the sales, let's say I have made the sales of 100 crores and my profit in this is the 20%. So what is the amount of profit here? What is the amount of profit here? It will be 20 crores. Are you getting me? But this sales either I will make in cash or either I will make in on credit. If it is on cash, it will create the cash, or if it is in the credit, it will create the debtors. Okay, till this everyone clear? It will create debtors. If it is in not cash, of course it will be in debtors. But ultimately, can I say that whether it is cash, then this sales is equal to this cash? Is it possible? Can I say the sales and cash both are same? The cash is nothing but the format of sales only. Same way, ultimately, if it is on the credit, sales becomes debtors. You have to understand these flows as being a chartered accountant. Can I say the sales and debtors are same? So in sales, 20% is my profit. So in this debtor, can I say 20% of the debtors is my profit? So the moment when I handshake with my debtors, can I ultimately say that I'm handshaking with my profit? Hello, I'm touching my profit. If it is in the cash form, if I touch my cash, ultimately I am touching my profit to the extent of 20%. Uh, I hope you are able to understand what am I trying to say here. The worst part of your batch is all of you are not answering. That actually I don't appreciate. I told you I think hundreds of times that your typing gives us the boost in what direction how we should proceed, but you are I think not taking us seriously. No problem. So touching the datas or the cash, that is nothing but what? Ultimately, it is nothing but what? You're touching your profit. So when it is a data, later or sooner it will be converted into cash or bank. Now when it is in the bank, later or sooner either it will be converted into fixed assets or it will be converted into investments. Do you agree with me? Hello? Do you agree with me? Hello? So as far as my dear students, this particular asset size is concerned, can I bifurcate guys all these assets into three parts? First is the money what I brought from my home. So one part of the asset will be capital. Other part of the assets will be made of the profit what I have earned. And third kind of assets what is reflecting over here in the asset, those assets will belong to the loans, that is the creditors. So ultimately assets I can bifurcate into three parts. Those assets what I brought during my business beginning, that is the capital. Those assets what I have created by earning the profit, and third kind of assets what I have created by taking the loans from the bank or other creditors. And that is why my dear friends, you people are taught that asset side is equal to capital plus liability. But today Mr. Chirag Akhani wants to correct this formula. Assets is equal to not capital plus liability, but it is capital plus profit plus liability. I hope you like the new formula invented by Chirag Akhani. I hope you liked it. But but again, this formula is also equally true. Why this formula is equally true? Because a lot of experts are believing that capital profit ultimately becomes the part of own money. So that is why they are considering C plus P as the one thing, and that is why they are saying asset side is equal to C plus L. Now, have you understood the entire philosophy of the balance sheet? How the balance sheet is going on, and each and every point case, how this formula was made. So fundamentally, why I'm telling this? Why am I telling this? Let me tell you why this discussion becomes very important. You won't believe this doubt I have received from the students at CA intern. What kind of doubt? Let me tell you. So the question what I was raising here, it was what is the source of dividend? That means what kind of money you can utilize to pay the dividend. So the first point what is written over here, according to section 123 subsection 1, it says out of the profits. Out of the profits. Can you see this highlighted point here? Out of the profits, and many students are asking the doubts that even if it is written in the book, but how can cash will be paid out of profit, because profit is different and cash is different. But now have you understood? No, all the profits will be converted into cash in future, and cash will be converted into certain assets. So when I say that out of the profits, that means out of the assets which represent the profits. Are you getting me? What am I trying to say? Hello? Huh? Out of the profits which represents the assets, right? Excuse me just a second. All right, I'm extremely sorry for the inconvenience because if you're taking the sessions from the home, so some household disturbances, you are not above that. You have to tolerate it. And I hope you are also facing the same issues, right? When you're studying from home, it has its own limitations, right? By the way, it has its own benefits as well. All right. So, it's, all right. Fine. So let's begin with that. The first question over here, what is the source of dividend? That means the dividend can be paid out of what? Out of what? So guys, source of dividend is actually explained or provided, as you can see over here, under section 123 subsection 1. Can you see this? Section 123 subsection 1. It is the source of dividend. And basically it has the four kinds of sources. Write down over here four kind of sources. The first source, what is mentioned here, it is out of, write down, out of, no, not this one, this one will be fine. Yeah. Out of current year's profit. That is the first source. Next source, if you don't have current year's profit, then you can declare the dividend out of the previous year's accumulated profit. That is nothing but the free reserves, right? Third point is very, very important. Third point. If you don't have current year's profit, if you don't have previous year's accumulated profits even, then third point it says that you can pay the dividend out of the money provided either by central government or by state government. You can provide it either money provided by either by central government or state government. Okay, no determinants, no determinants. Yes, just I on it. Is it visible now? Is it visible now? All right. So now if you have a doubt, like everything is fine, but why central government and state government? Look, we can understand that dividend can be paid out of current year's profit or the previous year's profit. That we can understand, but the biggest doubt over here is why money provided by central government and the state government? Don't you think it's something weird where central or the state government gives money for paying the dividend? Isn't it weird? Hello? Isn't it weird? What do you think? Yes. Now, why government will give money for dividend? Let me tell you. You see, there are a lot of segments or the companies. Even the government itself cannot afford to shut them down. For example, let's say there is a company which produces the food for poor at very cheap rate. Very cheap rate. This company buys, the grains, the wheat, the rice, processing the food for the poor people at very cheap rate. Now, this company is facing the losses. Why it is facing the losses? Obviously, if the grain price going up in the market, it would be very difficult for these kind of companies to buy the grains. And if the grains are they're buying at very high prices, how can they supply the food at very cheap rate? So already companies are running in losses, and with that you're also asking that please provide dividend to shareholders. Is it possible? And that is why these kind of companies are requesting to the government that you please give us the grants or the subsidies. Give us the grant and the subsidy so that I can continue to provide food to the poor people. At the same time, I can make my shareholders happy. Otherwise, we are going for winding up. And if it will go for winding up, don't you think the entire burden to supply food for these people will be shifted on the government, and government doesn't want it? Are you getting? Government does not want it. So on the special request, if there are special circumstances, during those circumstances, government supplies certain funds, some funds, and out of that funds specifically provided by the government to pay the dividend, you are allowed to pay dividend. So it is written, if you look at and come to section 123, just to focus here. Look, according to section 123, there are three different resources are given. The first resource is given out of the profits of the company for that year. So when I talk about the that year, that means we're talking about the current year profit. And obviously after providing the depreciation, so that is the accounting term. I think everyone knows that net profit, whatever we are considering, we should definitely give the provision for depreciation. Without that, it will not be used. Second point, it says, or out of the profits of the company for any previous financial years arrived after providing the depreciation. If you look at the section 123 subsection 1 clause A, it is crystal clear that either you can use the current year's profit to pay dividend, or you can use the free reserve, that means the accumulated profits, to pay the dividend. And B point says here that out of the money provided by the central government or a state government for the payment of dividend by the company in pursuance of a guarantee given by that government. Guarantee given by that government. All right, so there can be certain circumstances in which the government itself pays the money to pay the dividend, Now, many of you may have these doubts. Okay, before I go ahead with that, are you people clear with this clause A and clause B? Come on, students, about the source of dividend. Thank you, Shika. Thank you, Neha. Thank you, Jayesh. Are you clear? All right. Now the question is, what is this green color note? Green color note. Okay, so one thing is clear that free reserves can be utilized to pay the dividend, but sometimes reserves, if you look at the balance sheet, the reserve term, the term reserve includes the revaluation reserve. Revaluation reserve. Now, what is revaluation reserve? You tell me, is it the real reserve, what is realized in cash, or it is just the inflated value? Answer this. Revaluation reserve on the assets, is it realized reserve, or it is just inflated value of the assets? Come on. Okay, I don't want to talk a lot about this, right? I think this concept you definitely must have learned in accounts or costing or finance. So revaluation reserve, it is just the inflated value. It is not realized gain. So any notional or unrealized reserve, if it is reflecting in your balance sheet, this paragraph is saying that those kind of reserves cannot be utilized to pay the dividend. To pay the dividend, right? Look what is written, that in computing the profits, any amount representing unrealized gains, notional gains or revaluation of the assets, and any change in carrying amount of an asset or of a liability on measurement of the asset or the liability at fair value shall be excluded. What does it mean? Any kind of revaluation reserve, inflated reserve, notional gain will be excluded, will be ignored. will be economic. Clear? Just have a look at to this, students. I'm just coming back within 2 minutes, please. Thank you. Clear, guys? If you have done, type the word done, then I can go to the next explanation. Come on. Is it clear? Thank you. All right. After section 123 subsection 1, now we are going to learn about another point. The current year's profit, we don't have any problem. We don't have any problem. But whenever we are talking about the dividend payable out of previous year's accumulated profits, then apply your brain and just try to understand why anyone would like to go with previous year's accumulated profits. So can I say the simple reason for that is just because in the current year the company doesn't have the sufficient profit or it is running the losses. Otherwise, you tell me why you would like to touch the previous year's profit, what you have made or what you have reserved for your future contingency. You are touching your previous year profits because your current year's performance is not that much good. Am I right? Hello? Am I right? Your current year's profit is not that much good, and that's why you want to go for the reference of the previous year's profit. So you tell me the provisions to pay dividend out of accumulated profit should be strict or it should be liberal. What do you think about it? Should it be strict or it should be liberal? क्या लगता है आपको? Hmm? It should be very much strict. It should be very much strict. And that is why, guys, the company law has made the separate rules if any company wants to pay dividend out of previous year's accumulated profits. So now I want all of you to make it 5 stars. That is very, very, very important question. Now we are going to solve it. And what's that question? Write down, guys. What if company wants to solve? What if company wants to pay dividend out of accumulated profits or the free reserve? Note it down, guys. Student, I'm extremely sorry actually. Can I take you 10 minutes? I have urgent call to attend. Can I take you 10 minutes if you don't mind, please? Okay, till this, guys, you put this question that what is the process to issue dividend out of accumulated profit? And that is as per the section 123 subsection 1. Okay, what is the exactly the detailed solution? I'm just telling you later on. Write down process to issue dividend out of accumulated profit. Process to issue dividend out of accumulated profit. Again, guys, it is section 123 subsection 1. Read with rules. Okay. All right, students, am I audible? Okay, again, I'm extremely sorry for the inconvenience caused to you as it was very, very urgent and important form. I could not avoid it, and that's why. All right. So let's begin with our explanation, guys. We were discussing something about process to issue dividend out of the accumulated profit, and I told you guys why anyone would like to go with the accumulated profit. The logic is quite simple. The logic is quite simple because he or she does not have the proper profit in the current year. Now, what kind of questions we can expect in exam regarding the dividend? Let's see the question first, and then you start. Uh, or if you can see this word file, if I'm not wrong, right? Are you able to see this word file? All right. Let's read certain questions. All these examples are the already asked questions. Question number one. Alma Limited proposes to transfer more than 10% of the net profits of the company to the reserves for the current year before the declaration of dividend at the rate of 12%. Is Alma Limited allowed to do so or not? So that is the first question about your dividend. Now, many of you are maybe thinking that, sir, what it is exactly? What about this rate of dividend and what about this transfer of reserve? So let me tell you guys, before 2015 amendment, it was compulsory for every company to transfer certain percentage of profit to free reserve. It was compulsory. It was compulsory in the past. For example, if you had wanted to go with the 20% dividend, then your free reserve would be 10%. Like this, some certain table was there. For the 20% dividend transfer, at least 10% of reserve, 10% profit to free reserve. But after that amendment, guys, this requirement is deleted. So what does it mean? Today, no matter how much you want to transfer, sorry, how much you want to issue as a dividend, nothing will be transferred, nothing will be transferred to free reserve. So today, if company is going for 100%, reserve transfer may be zero, because according to the new rules now, company does not require to transfer any amount of profit to the reserve. Earlier it was allowed. Earlier it was compulsory. Are you getting this point, students? Hello? Earlier it was allowed that you can go till 15%, but now it is not. Now it is not. So read the answer, guys. Amount to be transferred to the reserves out of profits for a financial year has been left at the discretion of the company acting wide its board of directors. So what it's trying to say, now it is at the discretion of the company. If they want to transfer some reserve, it's fine. If they do not want to transfer, it is also fine. So the company is free to transfer any part of its profits to reserves as it deems fit. In the past, in CA final, a lot of questions had been asked on this basis, but now, as this provision is deleted, these kind of questions are less expected in exam. I'm asking again, guys, are you clear with this question? Are you clear with this question? Hello? Are you clear with this question? Thank you, Josh. Thank you, Neha. Next point is the example number 2. What it says, BRICS Limited has earned a profit of rupees 1,000 crores for the financial year 16-17. It has proposed a dividend at the rate of 8.75%. However, it does not intend to transfer any amount to the reserves of the company out of the profits earned. Can BRICS Limited do so? Again, it is the same question as I discussed earlier. Answer the question: if 8.75% it wants to issue as a dividend, is it compulsory to transfer any amount to reserve, or without it is fine? Answer the question. Not compulsory. It is left to discretion of the company. All right. Now read this question, guys. This question is your CA inter-exam question. What this question is trying to say: a public company has been declaring dividend at the rate of 20% on equity shares during the last 3 years. During the last 3 years. So since last 3 years, what was the consistent rate of dividend? 20%. 20%. Right? The company has not made adequate profits during the year ended 31st March 2017. So let's assume, students, it is the year end, but it has got adequate reserves which can be utilized for maintaining the rate of dividend at the rate of 20%. So guys, by reading these two lines, are you people clear with the concept that company does not have any current year's profit, but it has the lot of accumulated profits? Lot of accumulated profits. Advise the company as to how it should go about if it wants to declare dividend at the rate of 20% for the year 16-17 as per the provisions of the Companies Act 2013. All right, before you start reading the answer, my point is, are you people clear with the question? All of you, hello? Are you people clear with the question? All right. Again, guys, this question belongs to source of dividend only, from where it should be issued. So treatment is altogether different. The way you are used to do in current year's profit, the same cannot be used here. The treatment is altogether different, altogether different. All right, let's begin with, guys, the treatment. Okay. Can I delete this balance sheet now? I think it's not use because we have already done this. Okay. This part already we have done. All right. So what are the conditions here? What are the conditions? What are the conditions? Write down, guys, the structure of the provision first of all here. Structure of the provision. So basically, in order to answer this kind of questions, you need to remember 4 different conditions. Write down the conditions. 4 different conditions here. Condition number 1. Condition number 2. Condition number 3. And condition number 4. These 4 different conditions you need to remember. If you want to issue the dividend out of accumulated profit, condition number one is right, a maximum rate of dividend shall not exceed the average of the dividend rate of last 3 years. So fundamentally it will go like this: rate of dividend 1 plus rate of dividend 2 plus rate of dividend 3 divided by 3. So what is the first fundamental condition? Average should not exceed average of the last 3 years. Okay. Average should not go beyond this. Okay. Now second condition. What is the max? Okay, so you can put like this if you want to. It is the maximum rate of dividend. Second is write down maximum amount of withdrawal. How much maximum you can withdraw? So law says, guys, how much maximum you can withdraw? According to the law, it says it shall not be more than, shall not exceed, shall not, oh, I'm sorry, shall not exceed 1/10 of paid up share capital plus free reserves. So maximum you are allowed to withdraw is 1/10 of paid up share capital plus free reserve. Third condition, third condition, set off the losses first. Set off the losses first. You tell me, students, why anyone would utilize the previous year's accumulated profit? The answer is quite simple. Just because in the current year they don't have profit or inadequate. If there is the losses, guys, the 1/10 what you're withdrawing first, it will be utilized first for what? It will be utilized first for what? For compensating the current year's losses. For compensating the current year's losses. And then whatever amount is left over, that is available for, that is available for dividend utilization. So write down over here. Amount drawn shall first be utilized, shall first be utilized to set off the losses incurred in the financial year. Incurred in the financial year. All right. Before I go to the fourth condition, students, all of you are clear with these three conditions. I will give the example as well, don't worry. We will solve one sum as well. All right. After then, we are going to go with the next condition. It says about the balance of just a second, free reserves. Balance of free reserve. Write down after withdrawal. After withdrawal. Oh, sorry, here I do like this. After withdrawal, balance of free reserve shall not fall below 15% of its paid up share capital. Okay. So we have these four different conditions if you want to issue the dividend out of accumulated profits. My request is please complete this notes and then I will solve one sum based on this. And then we will take the question what is given in the material. Sure. All right. Once it is done, then figure one. All right. I hope it is visible and again come to that. And this is chapter 8. What it is written that provided that a company may before the declaration of any dividend may transfer such percentage of its profits for that financial year as it may consider appropriate. So have we solved the questions on this paragraph basis? That now company is allowed to transfer any amount to reserve without any hesitation. Now this paragraph is very, very important. It says that provided further that where owing to inadequacy or absence of profits in any financial year, any company proposes to declare dividend out of the accumulated profits earned by it in the previous years and transferred by the company to the free reserve. Such a declaration of dividend shall not be made except the accordance which such rules are followed first as may be prescribed. So guys, this is the provision that if you follow the rules, then and only then dividend can be declared out of the accumulated profits. But the question is, what are those rules? So simply click on this and you will see these are the same rules what I have discussed right now. Look, what is written? The point number one, the rate of dividend declared shall not exceed the average of how many years? Answer the question. Declared by preceding 3 years average. Further, it says the total amount to be withdrawn shall not exceed 1/10 of paid up share capital plus free reserves. Amounts of withdrawn shall be utilized first to set off the current risk losses. Balance of the free reserve shall not fall below 15% of its paid up share capital. So these are the rules. Declaration of dividend. And now this is what we are going to pursue with. All right. So are you people confirm with this now? Hello. Then we can start doing. Okay. Let's do a question and let's try to solve it. Suppose there's a company. Company's name is Neha Cements Limited. So this is the company Neha Cements Limited, and this company Neha Cements Limited, this company has decided to issue the dividend out of current year's profit. Okay, from the data given below, from the data given below, examine the maximum rate of dividend. Examine the maximum rate of dividend may be declared by the company. All right. Maximum rate of dividend may be declared by the company. All right. Let's go about this. So point number one, paid up share capital of the company is somewhere around, okay, paid up share capital, let me use the short form, is 100 CR. Free reserve is somewhere around 30 CR. Other liabilities somewhere around 150 CR. Last 5 years rate of dividend goes in this way. Sorry, last 3 years rate of dividend goes in this way. So preceding 3 years, 1, 2, and 3. So 3 years back it was 25. Here it is 30, and here it coming somewhere around 20. So on that basis, guys, calculate the maximum amount of dividend can be paid by the company Neha Cements Limited. Write down the question first, and then we are going to solve the entire thing. Look, this kind of questions are not asked in exam. The question what I have written over here, this is one of the toughest questions I have dropped it. If you have the capability to solve this, trust me, remaining portion or remaining part you can easily solve. Remaining portion you can easily solve. Okay. Type the question first, and then we are going to solution. Done. Once it is done, type the word done, guys. All right, so let's quickly solve the question now. Tell me, guys, the first condition over here is as per the maximum rate of dividend. So let's apply the first question over here. So what are the three rates of dividend? Can I say the three rates of dividends are, what is the average now? Okay, his current year's is not given. Let me tell you. Write down, guys, current year's losses. Have I said no? Current year's losses are somewhere around 1 crore. That is the current year's loss. Current year's loss. So condition number one क्या है? Average rate of dividend. So you tell me, guys, what is average rate of dividend? So 20. So if you make the total of these three, that comes to somewhere around 75. 75 divided by average 3. What is the answer? Sir, why all these conditions? Look, to stop cash flushed out of the business. Because right now you don't have a profit and still you are giving the dividend just to make the people happy. So cash will be flushed out of the business, which can adversely affect what? The business later on. So company now wants to control the cash outflow. You tell me guys, once dividend is paid, is there any chance to take it back? After paying the dividend, is there any chance to take it back? So right now you're running losses. It is the duty of the government, obviously, to stop the company unnecessarily making the people happy. That is only the reason why these strict conditions are imposed. I hope you are clear, Mahima. Right? Guys, are you people understanding what am I trying to say? Because if you are not responding, I doubt myself कि भैया क्या कुछ गलत तो नहीं हुआ ना यहाँ पे? All right. So let's solve the question of the average over here is the 20%, 25. All right. So according to the first condition, maximum rate of dividend will be 25%. Okay. What is the second condition? According to the second condition, the maximum amount of withdrawal shall be 1/10 of the paid up share capital plus free reserve. So you tell me guys, 1/10 of paid up share capital plus free reserve. So can I say it is 1/10? That means 1/10 is 10%. So 10 percentage of 100 plus 30. Come on. So कितना आएगा बताओ? कितना आएगा? So that would come to 30. So maximum amount withdrawable is 13 crore. Now 1 crore is the current year's losses 1 crore. So out of this 13 crore, what will be set off first? What will be set off first? Come on, what will be set off first? Okay, that's what I'm coming at, Jayesh. That will be here in the third step. Go step by step. Go step by step. Don't jump. So guys, 13 minus current year loss 1 crore. So now total available amount is 12 crores. Total available amount should be 12 crores. Now, after withdrawing this much amount, what should be the leftover balance? Can you tell me what should be the leftover balance in the free reserve? So right now, total is 30 crores. Total free reserve is 30 crores. How much maximum it should be left? So what law says here? It should not fall below 15% of paid up share capital. So what is the 15% of paid up share capital? So can I say 15 percentages of paid up share capital is equal to 15% of only 100 crores? Hello? So what is the solution now? 15 percentage of 100 crores comes to how much? 15 crores. So guys, according to the fourth formula, how much maximum you can withdraw? 15 crores. Come on guys. Hello. Right now, total 30 crores free reserve is there. So 15% of paid up share capital is 15 crores. So maximum you can withdraw 15 crores out of 30. So according to fourth option, maximum withdrawal comes to 15 CR. Hey guys, have you understood this last point? Hello, all of you. After withdrawal, it should not fall below 15%. Total is 30 crores. Balance leftover should be 15 crores. So maximum should be available 15 crores according to the fourth option. According to the fourth option. Are you getting my point? So guys, how many options we have? We have the three different options. 25% and maximum available is 12 and 15. Whichever is less amount that we have to consider for the payment of dividend. So guys, if you apply 25% dividend, what is the amount coming here? Batao. अमाउंट कितना आएगा यहाँ पे? अरे अमाउंट कितना आएगा? डिविडेंड इज पेड on paid up share capital, so 100 crores multiplied by 25%. So what is the option number A? So option number A will be 25 crores. What is the option number B? After deducting the losses, option number B comes 12 crores. What is the option number C? After the calculation of the leftover balance sheet comes to 15. So whichever is higher will be paid as dividend, or whichever is less will be paid as dividend. What's your answer? Come on guys, whichever is the least. So maximum amount of dividend you can declare in this year, it is 12 crores. 12 crore. So you tell me students, what is the maximum rate of dividend? So answer is quite simple. 12 crores divided by 100. What it comes? What it comes, students? So maximum you are allowed to pay only 12%. This is the solution of one of the toughest questions of dividend chapter. Okay, till this anyone has any doubt? Till this anyone has any doubt? I know I have taken some time and I'm extremely sorry for the inconvenience. Suddenly I had a meeting. Look, you people enjoyed the break, but I did not. After starting consistently, I'm doing but fine. By the way, it is for our mission. The mission is crack CA Inter. Crack CA Inter. That is our mission. All right. So is it clear to all of you students? Oh my God, it is 3:48. So that's all for today. I hope you have learned. Just one point is pending, but that I will explain tomorrow. Okay, make it 10 stars. Jayesh says that, but before all this calculation, we will set off the losses while preparing the balance sheet, right? But understand that losses will be set up at the third step. So first of all, you deduct this 25%, that is 25 crores. Then decide the reserve amount. Out of this reserve, you set off 1 crore and find the available balance for the dividend. Then third calculation, and out of these three, whichever is less, that will be the amount of dividend maximum you can. So free reserves will only be 29 crores. No, it will not be 29 crores. Let me tell you how much it will be left over. So total was 30 crores, right? Jayesh bhai, out of 30, 1 crore we have utilized for what? Setting of the loss. Remaining 12 crores now we are utilizing for what? For paying the dividend. So what is the leftover balance now? 17 crore. 17 crore is more than 15 crore as required as per the fourth point. So all the four conditions are meeting over here. So that is not, there is nothing inconsistent with the law. All the conditions are satisfied, and that is why paying 12 crores as dividend is not a problematic. Look at this. Total utilization, if you're asking me, it is 13 crores. Total utilization is 13 crores, but total dividend paid is only 12 crores. Then where this 1 crore went? To set off the losses. To set off the losses. Look, nowhere I read a lot of books, but nowhere the concrete example is provided. This example is created by Chirag Khani. Are you getting me? ये जो example यहाँ पे है ना बेटा, this sum, ये created sum है. It is not taken from any book. Even your ICI is silent on this. So am I clear to all of you till this? Hello? So should I shut the shop for the day? You can just leave the class. Thank you very much, students. Bye-bye. See you in the next class.